I'm Doris. I'm here to share with you about my stock account. Today, my stock account has earned $205 US. US stocks closed slightly higher in market, waiting for the Fed meeting and inflation data. Goldman Sachs cuts its forecast for a recession over the next 12 months to 25% as pressure on banks and bipartisan debt deal eased. So in my account today I've included two more stocks, which is UVXY and SQQQ. UVXY as a pro share of shorting VIX. This is due to, I believe, that the recent market data and just economic trends have revealed that the market is directing towards a more stabilized trend, and SQQQ because the AI because a shorting of Nasdaq is due to the AI bubble boom. Right now, the net asset of my account is $74,049.04, and the total position in my account is $195, which is a gain of 0.26%. Today, market generally closed mixed. Dow Jones Industrial Average closed up 0.03%, Nasdaq Composite closed up 0.36%, and S&P 500 closed up 0.24%. Today, the banking industry led the gains, with the regional banks closing up more than 2.5%. The S&P 500 is near its highest level in 9 months. Investors are waiting May inflation data ahead of the next week at the federal policy meeting. KKM Financial CEO Jeff Kimberg said, investors are preparing for Fed's policy meeting next week, and the market could avoid a big volatility. But he said it is worth noting that the market has broken through its trading range in recent months. Mr. Edward Moya, senior market analyst at Oanda, said, U.S. stocks are volatile because Wall Street doesn't know how much more tightening the Fed will have. Analysts at J.P. Morgan, led by Andrew Sheets, estimate that the S&P 500 companies' earnings per share will fall 16% this year, which could halt the rally. They pointed out that the stock market valuations over the next 3 months, in addition to poor liquidity due to slowing revenue growth and shrinking gross margins, gave the year-end target of 30,900, a 9% decline from Friday's close. Citigroup strategist said that while artificial intelligence is a hit, the boom will pass, and keeping the benchmark forecast of 4,000 down 6% from Friday's close in anticipation of a moderate recession. Apple continues to slide. The iPhone maker hit a record high after opening yesterday, but closed down about 8.6%. The company first unveiled its much-anticipated virtual reality headset, as well as new software at its annual Worldwide Developer Conference. The company's first MR set, the Apple Vision Pro, is priced at $3,499 and is expected to launch in early 2024. The market generally believes that the price is too high and the mass production time is lower than the previous market expectations. Global investment senior portfolio manager Keith Buchanan said, if you are a $3 trillion company, you do have some kind of overwhelming leverage. Given the absolute size of its market value, Apple will have an impact on most broader indexes. Fed will hold its monetary meeting on June 13th to 14th, and Fed officials are now in silence. A slew of recent economic data, combined with the recent dovish comments from several Fed officials, has raised confidence that the Fed may not raise interest rates at the meetings. CE's Fed Watch tool showed that the market expectations of Fed to remain unchanged at 82%, up sharply from 36% a week ago. Delma Capital Chief Investment Officer Derek Dogan said, the recent risk for equity investors is that the Fed does skip this meeting and raise rates in July instead of June. The U.S. Federal Reserve is expected to raise interest rates by another 25 basis points in July. After the collapse of SVB, the bank raised its recession probability to 35% in mid-March. As the regional bank shares price stabilized, deposit outflows slowed. Loans and loan survey shows that the future will only appear limited tightening. We're more confident. According to our benchmark forecast, banking pressure will only on actual GDP growth this year, constitute a moderate 0.4% drag. Goldman's chief economist Han Jesus wrote in a report. At the same time, the tail risk of the destructive debt ceiling dispute has also disappeared. Goldman Sachs had a 2023 growth forecast of 1.8%. The people surveyed were expected to be 1.1%. Jesus said it was unclear whether the Fed policymakers needed to cause a recession to return inflation to 2%, and the key factor was whether the labor market could smoothly return to balance. Inflation is still above 4%. Jesus wrote that the June 13th to 14th meeting, Fed officials were likely to signal further future rate increases through quarterly federal funds rate forecast. Goldman Sachs economists expect the Fed to raise rates by another 25 basis points, most likely in July, to reach its peak rate target of 5.25% to 5.5%. Then we expect a long pause, about a year, and a very gradual rate cut. Jesus wrote, on a probability-weighted basis, we still believe that the market has underestimated the funds rate outlook for the next 1 to 2 years. That's all I have for today. Thank you for listening. Don't forget to subscribe. See you next episode.